just how big and important is the cyber liability insurance market? Well, if you're a small business or medium business and are wondering whether or not you should have cyber liability insurance, or if you don't have it at this point, you should definitely contact your agent or our firm to find out what coverages are available. And here's why. This is a company that is a brand new firm that has raised $100 million to build out a cyber insurance platform. This is how important this market is. According to the company, they believe that the first wave of cyber insurance growth was high but constrained, meaning that it's not even scratching the surface of what is going to be needed for coverage. The belief is that because of the fact that risks are now changing from physical damage risks, fire, theft, personal injury, into a cyber market, the insurance companies have not yet caught up. The traditional legacy insurance companies that write commercial insurance, Chubb, auto owners, travelers, any of the major insurance companies, they're not yet doing insurtech. Certainly, some of them offer cyber policies, but in the same way that activity in the real world is switching from active physical in-person to more remote technology, the insurance risk needs to also change to that technology. If a company is raised $100 million just to start a new platform, that tells you what the future of this market is. The threat landscape has evolved dramatically. COVID-19 expanded the attack surface. What that means is the place where threats and damage can occur has switched from storefront to website, from fire in a factory to losing important data. The heightened efforts are more hacking and malware. You know, some of the cyber risks are for bad actors who are looking to damage your company. Some of it is just accidental. A server is physically damaged. A cloud system is infiltrated. Many of these risks are overlooked compared to larger enterprises, meaning that small to medium businesses don't yet have the cyber protection plans in place that many large companies do. And underwriting cyber insurance is a dire prospect for small businesses than for large enterprises. If you are a Fortune 500 company, General Motors, and they have one of their servers hacked, they have 3 or 4 or 5 or 20 backup servers, and their records are more robust. If you're a small company that has 2 servers, and they both go down and one's damaged and you lose your accounts payable, accounts receivable data, customer data, you're going to have a serious problem. This company, Cowbell, is a massive data operation. It monitors 71% of the companies in the U.S. market to figure out trends in usage, and it does an algorithmic evaluation that can rate and price this insurance. That's going to be the key to cyber liability insurance. What is the risk? When they write fire insurance for a business, they know based on historical data what is the likelihood and cost for that risk. They know what's the chances that building's going to burn down, how much it costs to repair it, what type of businesses have higher risks, because they have 70, 80, 100 years sometimes of historical loss rates that they can put into place. There is no historical loss rates for cyber liability. So the faster they can ramp up this data acquisition, then the faster they'll be able to put good policies in place. Also, they offer security services at no cost. Because here's the thing, cybersecurity and insurance bundled together in one product is the way to go. Because if you are a underwriter of insurance policies, if you're writing fire insurance, you can't show up at every business you write and try to put out fires, prevent fires, because you have to go there in person. However, cyber insurance as an insurance company you can actually provide the prevention remotely. You can prevent cyber losses without having to be there. By doing that, you can write more policies because you're comfortable with the risk, and you can also write the policies for a lower premium because you're providing the prevention. They have their own reinsurance operation and take a small risk because that's been very profitable. This is just one example. This is one single company that has raised $100 million to build out AI. It's not even a fully formed, rolled out company. They're building out its cyber insurance platform. There's a lot more to go. There's a lot more relevant growth in this insurance market, and if this one company is attracting $100 million to back it up, that tells you how important this product is. If you are a small or medium business, you should look at getting cyber coverage as soon as possible, because the sooner you're in this market, the easier it's going to be to retain and maintain coverage in years to come. It may be that 2 or 3 years down the road, companies that are first getting their first policy might be priced higher or maybe not even have sufficient coverage because they don't have a loss run, they don't have an experience with an underwriter. Talk to your agent, look at different options. If your agent doesn't have a wide range of coverage, because some legacy agencies only write physical damage or old coverage models, ask them to look at fintech coverages. Many agencies may not be able to write coverage through different carriers, so look at different carriers that are available, and if you can get something, see if your agent can become an agent of record or can take on that policy, even if you have to find it for them. Having it all in one place is an advantage because it can dovetail and interact with other policies that you already have in existence. Things like professional liability, premises liability, general liability, commercial auto. You want that all to dovetail in, maybe even a commercial umbrella over the top of everything. Having that cyber liability policy in place will go a long way to protect against the future risk. Just because you haven't seen these risks or had these damages before doesn't mean they don't exist, because they are the risk for business of the future.